Let's say you developed an algo strategy and it is running well and you are making profits out of it. So obviously the usual tendency is that let's start one more algo. And then let's say if that is also becoming profitable, obviously we'll feel like let's start one more algo. Like that, adding one algo after the other might look well only till certain point. After that, I'll tell you what are the practical difficulties that you can face if you are running multiple algo strategies. First thing is, if your all algo strategies are depending on the same market condition, that means let's say all the algo strategies are giving you profit in bull market only and they're all giving losses in the bear market, then your concentration risk is too high. That means in any month or any months if the markets are bearish, you will be losing 3 times more than the usual because all your strategies will be going into loss. So in case if you are running multiple algo strategies and creating it as a portfolio, you need to understand that it should be having a proper correlation. That means it can have a zero correlation or a negative correlation. But having a positive correlation, that too more than 0.5, is not generally suggested. So if the correlation is zero, which means that one strategy is not affecting the other strategy. But if the correlation is more than 0.5, then most likely it means that almost all your strategies are highly correlated. That should not be the case. If it is negatively correlated, then it can say that if one strategy is giving profit, the other one is giving losses kind of thing. Ideally, I would say that it will be a sweet spot if you have a zero correlation or maybe minus 0.2 correlation. That is one thing. Second thing is, when you have multiple strategies and then all of them are running automatically, then the moment you see the live market, what happens is some trade will be taken in the long direction, maybe some trade will be taken in the short direction, and there will be contradicting. Definitely, if you try to make sense out of it, it might not go well. Because on the live market, maybe you feel like the markets are going up, but it can trigger like a downward trending kind of a trade also might trigger. So it can be a little bit confusing and overwhelming if you keep seeing multiple strategies going in multiple directions. But what you just need to understand is these are the strategy logics which are already decided. They are just running as per the strategy logic. You should not try to intervene in between saying that why the PE trade is being triggered when the markets are going upside. Maybe that could be because of your strategy logic that you have designed. So you should completely try to over-optimize multiple strategies and just let it run. Third and most common problem is the capital fragmentation. Let's say if you have 5 lakhs of capital, you need to maintain let's say 2 lakhs of capital for one strategy. Now, if you are running 3 to 4 strategies, you need to maintain that additional capital for each and every single strategy. Because it can happen that on a particular day, maybe all the 3 to 4 strategies of intraday strategies can trigger all at once. At that point of time, if you are not maintaining sufficient capital for each of the strategy, then it can happen that maybe 2 will trigger, 2 will not trigger. And whatever is not triggering, what if you are making a significant profit out of it on that particular day, then you will lose out on the good profits on a particular day. So you have to ensure that. And also not only the required capital, you need to maintain such a capital which will be also including the drawdown capital as well. So usually how the drawdown capital works is, if any algo strategy requires a capital of 20,000 per one lot, but it is having a drawdown of 30,000, then you need to maintain total 50,000 capital in that particular one strategy. Like that, you need to decide what is the actual required capital and the drawdown capital for each of the strategy, and you need to combine all of the individual strategies, then you will get a total capital requirement. That much capital you need to maintain. If you are making profits in that, you keep adding to that, but whenever you are making loss, you need to make sure that you are replenishing the capital so that it will continue without having any issues.